So this is from Ryan. So Ryan 314. Really appreciate you. Hi Robert. Thanks for doing this. Might be a question for Rooster, aka Ryan Ricci, but wondering if you could provide context on this from the early look today. We care much more about growth than inflation. So why does Ricci, why do you make that comment? And I actually I screenshotted the early look note, a little paragraph. So if we go to that next slide, guys, you can look at the commentary there. On the larger trend data points to watch, we care much more about growth than inflation. Although from a global industrial standpoint, both Keith and Jay Van Sciver are teaching us to look at PPI. I hear you. So is anyone else noticing that PPI has gone negative year over year in China, Brazil, Thailand, Chile, Russia, and Singapore, as well as coming down precipitously in Norway. So that was kind of the paragraph that Ryan was referencing from the early look. And the main thing is that, I've said, we've said this a number of times. I've certainly reiterated it on the weekly notebook review here on a beginner's guide. But the recession risk rising is the biggest piece of, I guess, like headline or kind of news item to be or kind of data point to be focused on this year in 2023. Inflation was being transitory was basically 2021. 2022, again, everyone was still focused on inflation. We were focused on recession risk rising and the disinflationary environment that you could see in inflation. Now, oil kind of held up through the summertime and then has had a massive move lower from a cycle to date standpoint. From I think that was kind of like late June-ish, June, July timeframe. But that's the big thing, right? So inflation is kind of like yesterday's story, even though everybody's still paying attention to yesterday's story, and it's absolutely a focus for the Fed to get inflation down to 2%. That also drives a key reason why Christian Drake, for instance, wrote about and it's been commented on top 3 things this week, et cetera, why we are in the camp that risks are higher for longer, right? So that inflationary number of 2% is a really crucial one that the Fed's trying to get at. But, the big thing to us is that the growth number is a number that's really going to drive the potential risk to the downside, right? So recession risk rising is the thing to be focusing on. So if we pull up the next slide, Genron, slide 10 there, I've kind of given down. So these are all updated numbers as of yesterday afternoon. They were presented Wednesday afternoon, Wednesday. This was all presented on the macro Q2 mid-quarter macro themes update on Wednesday. If you haven't watched that yet and you're a Macro Pro subscriber, I would very much encourage you to do so this weekend. It is an absolute, it was a phenomenal presentation by Josh and Keith and the entire macro team. So, kudos to them for putting that all together. But the big thing here, and the reason why growth is a key component and kind of has a big data point here, is that flat to down GDP is recession risk rising, right? So if you look at those numbers, we've got 1.17 is our nowcast there for Q2. Then we're going up slightly to 1.41 and then 1.31 and 1.09 for the next kind of consecutive quarter. So you're basically looking at under 1.5% year over year growth for the next 4 quarters, and a lot of growth around 1%. So if we go to the next slide, that I'll show you what it looks like from a Q over Q standpoint, and that Q3 GD3 print is appearing as an acceleration. That is why we have a quad 1 on our map, which I'll get to in a minute. But we're also going from, as I just said, 1.17 to 1.41 on a year over year growth standpoint. So although that is an acceleration, it's not like you're accelerating from 2% growth to 6% growth like we had in 2022, I believe it was, 2020. And so this growth component, that quad 1, it could look very different than what a traditional quad 1 has looked like in the past, right? So we're going to be navigating this very, very intently, very, very closely, paying close attention to the signal as well as what the quad map is saying. And I think the other thing there, and I mentioned signal because if we go to the next slide, slide 12, guys, the growth conditional probabilities are basically a coin flip right now. So I've zoomed in. This is just the growth piece. We have the same thing. If you're familiar with the macro themes deck, I'd encourage you to go look at this slide from both the growth perspective and the inflation perspective. But just where we're talking about growth, I figured I'd just zoom in on this. So again, your conditional probabilities there on the bottom half of that, you've got quad 1, quad 2, quad 3, quad 4. in Q2 this year, and this is what, Q2 right now, Q2 2023 is one of the big reasons why Josh was so bared up going into mid-quarter update, and the whole team, that whole deck was just for lack of a better word, bear porn, because we have a deep quad 4 and a big conditional probability here of 63.3%. So unless the data starts starts changing and shifting and adjusting those numbers, where perhaps quad 1 is basically the next conditional probability on the board at 34.2%. Unless something drastically happens here from an economic data standpoint that's going to get reported for April here, the next few continue to get reported for April, and then May, and then June, obviously. We're seeing a quad 4 on the board and a very high conditional probability of that occurring. Now, as we go out in time, depending on the data and as it rolls in, these conditional probabilities are going to shift. So a quad 1 in Q3 right now is what's on the board at the moment, but you've got a 33.3% chance of quad 1, a 25.9% chance of quad 2, a 17.9% chance of quad 3, and a 22.9% chance of quad 4. So, call it around, a coin flip. Certainly Q4 is a coin flip, basically, where they're all practically sitting around somewhere between, 22 and 28%, with quad 4 kind of squeaking out the win there. And then similarly in Q1, we've got a slight acceleration in inflation, which is really driving the main change here. But really, you're getting just a slight growth acceleration as well. And then inflation on the other side is accelerating in conjunction, and therefore it's getting a quad 3 on the board. But you're looking at basically 30% chance of quad 3 and a 28% chance of quad 4. So as data continues to roll in, that 30% could easily start to creep lower, and your conditional probability of quad 4 could easily increase. It could also shift to other areas like a quad 1 or quad 2, but I'd say unlikely given what we're now casting out there on the model. So hopefully that's helpful. That's why we're focused on the growth side of the coin, because inflation, inflation is definitely something to be looking at, but we've got it basically getting sticky around a little under 4% for the next few quarters. I think it was like around 3.75, call it, to 4% over the next 4 quarters in terms of inflation. That data is all, as I said, in the macro themes deck. It gets updated regularly whenever we get econ data coming in. Drago puts it in the model, and we send that out to Macro Pro subscribers. So be paying very close attention to that. It's a key piece of my toolbox in terms of kind of understanding what's on the horizon and where we are today and all that kind of stuff.